Hello, everyone. Welcome back to Cashegories, your go-to channel for financial news, insights, and strategies. Today, we dive deep into a topic that's making headlines worldwide and has profound implications for the global economy. Why is China so interested in Taiwan, and what are the economic stakes behind this ambition? Stay tuned as we unravel the intricate web of history, technology, and geopolitics that ties China to Taiwan. Let's get started. To understand China's interest in Taiwan, we need to start with a bit of history. Taiwan, officially known as the Republic of China, ROC, has been at the center of a territorial dispute since the end of the Chinese Civil War in 1949. The war ended with the Chinese Communist Party, CCP, controlling mainland China and the nationalists retreating to Taiwan. Since then, China has viewed Taiwan as a breakaway province that must be reunified with the mainland. This historical context is crucial because it frames the political and ideological motivations behind China's desire to bring Taiwan under its control. The CCP considers the reunification with Taiwan as a vital part of China's territorial integrity and national pride. This goal is deeply embedded in the party's narrative and is seen as a way to rectify what they call the century of humiliation, when China lost territory and suffered foreign domination. The historical context isn't just about past events but also about the future vision of China. Reunification with Taiwan is often portrayed as a step towards achieving the Chinese dream of national rejuvenation. But beyond the politics, there are significant economic reasons driving this ambition. Let's start with one of the most critical economic factors: technology. Taiwan is a global leader in the semiconductor industry. Companies like Taiwan Semiconductor Manufacturing Company, or TSMC, are at the forefront of producing advanced semiconductor chips. These chips are the backbone of modern technology, found in everything from smartphones to high-performance computing systems. Control over this industry would be a game-changer for China. It would significantly enhance China's technological capabilities and reduce its dependence on foreign technology, which is a strategic priority for the Chinese government. To give you an idea of the scale, TSMC produces over 50% of the world's semiconductors and around 90% of the most advanced ones. These semiconductors are crucial for developing technologies like artificial intelligence, 5G, and even military applications. Without access to these chips, many technological advancements would slow down or halt completely. The semiconductor industry isn't just about producing chips, it's also about innovation and research. TSMC invests heavily in R&D, pushing the boundaries of what's possible in semiconductor technology. By gaining control over TSMC, China would not only have access to advanced manufacturing capabilities but also to cutting-edge research that could propel its own tech industry forward. TSMC's technology is crucial not just for consumer electronics but also for advanced applications in artificial intelligence, military technology, and more. If China were to gain control over TSMC, it would have a substantial edge in the global tech race. This would allow China to develop its own high-tech products more efficiently and at a lower cost, potentially dominating the global tech market. Another major reason for China's interest in Taiwan is the potential economic integration. Taiwan's economy is robust, with a highly skilled labor force and advanced manufacturing capabilities. Integrating Taiwan's economy with China's could create significant synergies. Taiwan's GDP is around $670 billion, making it one of the top 20 largest economies in the world. Its economic structure is highly developed, with strong sectors in technology, manufacturing, and services. By integrating Taiwan's economy with its own, China could boost its GDP significantly and create a more diversified economic structure. Moreover, Taiwan's highly skilled workforce is another attractive factor. Taiwan has a well-educated population with expertise in various high-tech and manufacturing industries. Incorporating this skilled labor force into China's economy could enhance productivity and innovation, giving China a competitive edge in global markets. Imagine combining Taiwan's strengths in high-tech manufacturing with China's massive market and industrial capacity. The economic benefits could be enormous, leading to enhanced economic growth and increased competitiveness on the global stage. Furthermore, Taiwan's robust infrastructure, including its ports, transportation networks, and communication systems, would complement China's infrastructure projects. This integration could lead to more efficient logistics and supply chain management, reducing costs and improving the flow of goods and services. Integrating Taiwan into China's economy would not only boost China's technological and manufacturing sectors but also provide access to Taiwan's substantial foreign reserves and strong financial sector. This could bolster China's economic stability and provide additional capital for investment. Additionally, Taiwan's strong trade relationships with countries around the world could be leveraged by China to expand its own trade networks. This would enhance China's ability to export its goods and services, further strengthening its economy. Control over Taiwan would also give China significant leverage over global supply chains. Taiwan's semiconductor industry is a critical part of the global tech supply chain. By controlling this industry, China could exert considerable influence over other countries and companies dependent on Taiwanese semiconductors. The global tech industry is highly dependent on Taiwan for advanced semiconductors. These chips are essential for manufacturing a wide range of products, from consumer electronics to automotive systems and industrial machinery. Disruption in this supply chain could have severe consequences for global tech companies, leading to delays, increased costs, and potential shortages. This leverage could be used to gain political and economic concessions from other nations, further enhancing China's global influence. For instance, China could prioritize chip supply to countries that align with its geopolitical interests or to companies willing to invest in China. This would not only increase China's economic power but also its political leverage on the global stage. Taiwan's role in the global supply chain is pivotal. Any disruption or change in control over this industry could have far-reaching implications for global technology companies and industries reliant on advanced semiconductors. Companies would be forced to re-evaluate their supply chains, potentially moving production elsewhere or investing in alternative sources, which could be costly and time-consuming. Taiwan is also an important trading hub in Asia. Control over Taiwan would give China greater access to regional markets, enhance its trade routes, and potentially increase its economic influence in the Asia-Pacific region. Taiwan's strategic location in the Asia-Pacific region makes it a vital node in regional and global trade networks. Its ports are some of the busiest in the world, facilitating the flow of goods between East Asia, Southeast Asia, and beyond. By controlling Taiwan, China would have direct access to these trade routes, enhancing its ability to export goods and import necessary resources efficiently. Enhanced trade routes through Taiwan could make Chinese goods more competitive in global markets, providing a significant economic boost. It would also allow China to bypass potential maritime choke points controlled by other countries, ensuring a more secure and reliable flow of goods. Taiwan's strategic location and established trade networks make it a valuable asset. Control over Taiwan would not only enhance China's trade capabilities but also position it as a more dominant player in the region. This could lead to increased trade volumes and economic growth, as well as greater influence over regional economic policies and agreements. Taiwan has substantial foreign reserves and a strong financial sector. Incorporating Taiwan's financial assets could bolster China's economic stability and provide additional capital for investment in domestic and international projects. Taiwan's foreign reserves are estimated to be over $500 billion, one of the largest in the world. These reserves provide a financial cushion that can be used to stabilize the economy during downturns and to invest in strategic projects. By gaining access to these reserves, China could enhance its financial stability and fund its ambitious development plans. This influx of capital could be used to support China's ambitious Belt and Road Initiative and other global investment projects, further extending its economic influence. The Belt and Road Initiative aims to create a network of trade routes and infrastructure projects connecting Asia, Europe, and Africa. With additional financial resources from Taiwan, China could accelerate these projects, strengthening its economic ties with participating countries and increasing its global influence. Taiwan's financial strength could provide China with the resources needed to pursue its global economic strategies more aggressively. This includes infrastructure projects, loans, and investments in other countries, which are key components of China's global influence strategy. Moreover, Taiwan's financial sector is well developed and highly efficient. Integrating this sector with China's financial system could lead to better financial services, increased capital flows, and enhanced investment opportunities for both domestic and international investors. Lastly, Taiwan's tourism industry and cultural assets could boost China's tourism sector and promote cultural integration. Increased tourism and cultural exchange could lead to higher domestic consumption and economic activity. Taiwan is known for its rich cultural heritage, beautiful landscapes, and vibrant cities. It attracts millions of tourists every year, contributing significantly to its economy. By integrating Taiwan's tourism industry with its own, China could enhance its appeal as a tourist destination, attracting more international visitors and generating more revenue. This soft power aspect is often overlooked but can play a significant role in strengthening economic ties and fostering a sense of unity. Cultural integration can lead to increased understanding and cooperation between the people of Taiwan and China, promoting social stability and economic growth. Tourism and cultural integration can have significant economic benefits. They not only generate revenue but also promote mutual understanding and cooperation, which are essential for long-term economic stability and growth. By promoting cultural exchange, China could enhance its soft power and create a more harmonious relationship with Taiwan. So, there you have it. China's interest in Taiwan is driven by a complex mix of historical, political, and economic factors. The potential economic benefits of controlling Taiwan are immense, from technological advancements and economic integration to control over global supply chains and enhanced trade routes. Understanding these economic stakes helps us grasp why Taiwan is so important in the global geopolitical landscape. As always, stay tuned to Cashegories for more in-depth analyses and insights into the financial and economic issues shaping our world. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Thanks for watching, and we'll see you in the next episode.